As a bookkeeper, you may choose not to specialize in payroll services. However, there is some basic knowledge about payroll that you'll need to know if your clients outsource this service. Let's start by defining some key terms. Gross pay is the total amount that an employee earns before payroll taxes and other deductions are withheld. Net pay is employees' take-home pay after payroll taxes and deductions are withheld. Payroll taxes can include federal taxes, state and local taxes, state disability insurance, Social Security and Medicare. Other deductions may be optional, such as 401k contributions for retirement and health insurance. They can also be mandatory, such as wage garnishments and child support payments. In this example, the employee earns $25 per hour and works 80 hours in a 2-week period. Her gross pay is $2,000. Taxes are the amount withheld from her paycheck, which is $454.52, so her net pay is gross pay minus taxes, which is $1,545.48. Let's take a look at the payroll journal for a more detailed look. In the earnings sections, we can see that the employee works 80 hours and earns $25 an hour for a total of $2,000. In the employee taxes section, we can see the various taxes that she pays, which includes federal income tax, state and local tax, Social Security and Medicare for a total of $454.52. In the employer taxes section, we can see the employer pays Social Security and Medicare for a total of $153. And in the total section, we can see that the net pay, which is gross of $2,000, minus the employee taxes, which gives a take-home pay of $1,545.48. To record these details as a journal entry, we need to follow this table as a guide. We have an expense account called salaries and wages, which we're going to debit to record the gross wage for the employee. We have a liability account called payroll liabilities, which is going to be credited, and that records the payroll taxes that are withheld from the employee's check, which will be paid at a later date. So these are federal and state taxes. And we're going to credit the checking account to pay the employee her net pay. So in this example, we're going to debit the salaries and wages expense account, $2,000, which is the gross wage for the employee. We're going to credit the payroll liabilities account by $454.52. This is for federal and state taxes which are owed and will be paid at a later date. And we're going to credit the checking account $1,545.48, which is the net pay for the employee. Now the time has arrived to pay taxes. Let's look at the journal entry guide for this next step. We're going to debit the expense account taxes paid payroll taxes for the employer portion of taxes owed, and we're going to debit the payroll liabilities account, and this is for the funds that were previously withheld from the employee's earnings. We're going to credit the checking account for the payroll taxes that the payroll company is going to send in order to pay state and federal taxes owed. In our example, we're going to debit the taxes paid payroll taxes expense account by $153 in order to pay the employer taxes that are owed. We're going to debit the payroll liabilities account by $454.52. So this is going to zero out the liability account, so the employee no longer owes federal and state taxes. And we're going to credit the checking account by $607.52. So this is the amount that's sent by the payroll company in order to pay federal and state taxes that were owed. This basic understanding of payroll will help you when you have clients that outsource this service. You can download the Payroll Journal Entry Guide. The link is in the description below.